Good evening. This is the Elliott wave update for the NASDAQ 100 and the S&P 500 for Wednesday, April 3rd, 2024. It is not getting any easier, folks. I got to be very honest with you that the NASDAQ continues to be extremely complicated when I don't think it needs to be. But every time I feel like, okay, we've kind of got to figure it out, and I try to run with what I believe is happening, it seems to change its mind. Now, I'm going to try to update this. I'm going to start again on the 4-hour chart in the NASDAQ to kind of just go along with where we're at right now. So I do believe that we're continuing to be within a minor fifth wave up, and it is forming a diagonal triangle. And within that diagonal triangle, I have minute waves 1, 2, 3, and likely 4 complete. Now, that being the case, what we are now in would be the minute fifth wave up, which should also form an ABC and more of a zigzag. So this should be a 5-3-5. It's not exactly starting out like that. So I'm going to go right from there. I'm going to bring it down. Let's go to the 1-hour chart and let's take a look at in here. In today's action, I mean, that was the low from yesterday. We rallied up, we came back down, and this was starting right where we got in this morning. The first thing out of the box we had at 8:15 Eastern, we had the ADP. I believe it was today, the ADP report. Let me just double check, make sure I'm not making a mistake there. Yeah, we had the ADP employment. And then we had at 9:45, we had the U.S. Services PMI, the final, and 10 a.m. we had the ISM. As I had discussed, I said the ISM is known, at least in my trading history, to be a market mover. Well, the ADP employment, they kind of were lukewarm too. The market went down, went up, and came back down. And then, so we get ready and we decide we're going to go to the opening, and we're still kind of turning around a little bit, going back and forth, and then right that at 10 a.m. and that ISM comes out and they like it. Whatever it is, it's well received. Algorithms, everything, everybody jumps back in. Market begins to like it's going to start to launch higher. And that actually fit perfectly because I'm like, oh, great. I need to kind of get in here and we need to do an ABC or a 5-3-5 up to complete this whole picture. Then this afternoon, and I'm going to bring it down to the 15 so we can take a little bit of a deep dive inside of all of this. So here we have what we had this morning, and we come in and we up, down, up, and all the way up. So basically, it's almost A, B, 1, 2, 3, 4, 5. So it could be a C wave, or just an ABC structure higher. Now, then we get the sideways action coming all the way down and to just before the opening. So is this 1, 2? That's actually how I'm going to count it. If it's not, it's A, B. And now we're starting either a C wave or it's 1, 2. This is 1 of 3, 2 of 3, and we're going to start continuing to launch higher. So it's not making it clear, but we're going to give the benefit of the doubt that this is indeed wave 4, and that we are in wave 5. Now, bursting out of the box is minute wave 5 would reach 0.618 resistance, which, as I discussed yesterday, likely is going to fit because the market is continuing to weaken. So a quick run back up to here. And actually, that response this morning from ISM, I was like, okay, go for it. And then to get what we got after, where they came back nearly all the way back down, right? It tops out at 18,450 or thereabouts. 18,000. Oh, let me just get this number for you. 18, yeah, 451, almost 452. And then it bottoms in between 3 and 4. It bottoms at 18,303. So they chop this thing right back down over 100 points and then rally it back up 90 after hours, or into the close, and then the extra hour that we get. So totally bizarre how these markets are trading. It fits within the triangle pattern. It fits that it's a finishing move. It fits that we could be in that fifth wave. But I have to tell you, it's like still hugging and staying within the boundaries. That's really the only thing the NASDAQ, I think, has it really going for it right now. Now, how does one trade this? Well, I have to tell you, as a day trader, yeah, it's not impossible. You can go and you can make money. That move up, it was great. And there was enough signals to tell us that it was going to go. And if you can read candles or even just other indicators that you might be using, it continued to just tell you, just stay in or get back in. And so it was not the most difficult day in order just to make some money day trading. If you're an options trader, well, maybe it was okay, but you could be trading in 0 DTE options, for example. And you could do that in the Qs. Or you could do it in the SQs or in the TQs. And so there again, you might have a good chance. If you're trading the SQs or the TQs, there was a good opportunity to make some money in those products and those ETFs. So the ability, but again, it's really on a day trading basis. Position trader, I think more difficult. If you're a long-term position trader, you're just hanging on because you've not really gotten your sell signal yet. So, but swing trading, a little bit more difficult. And I will grant you that. This market in the NASDAQ has not been easy. And I'm going back to towards the end of February, where it's just been all over the board. But it's hanging in to this triangle pattern. So I'm going to continue to go with that. I'm going to continue to go that, yep, I believe we still have some upside yet to do. So how does one want to choose to play it? That's up to each one of us as an individual. I will continue to play it as the market presents it. Being a day trader, you get to choose, okay, I can go long, I can go short, I can put a limit on it, I can, put a stop in. I got all kinds of things that I can do to protect me, my positions, and my capital. So, but that doesn't, it may not jive with everybody. So what I believe, and how I'm going to leave this, is, as I said, I'm going to bring it back down to that 15-minute chart. Let's go over this real quick, because outside of that, folks, there's really not a whole lot more to be talking about here with these markets. I'm not sure whether to call it 1-2-1-2, in which case I've run it for this third. So I'm going to, if I leave it 1-2-1-2, here's the third, and 100%, right? But we're looking at it being this wave. So this third would be 100% of that first wave at 18,522. A little bit more would be good. 1.618 is 18,657. But if we get up there, we're getting close to that finishing point at 18,757. But maybe this would be 3. We pull back in 4 and we get a 5. Now, here's the thing. Tomorrow's Thursday, then we have Friday. Are they going to be done? Is it going to be done this week? Or are they going to push this out into next week? Who knows? But we're going to continue to look at it day by day. So this is how I will leave this. I'm still looking for additional upside. I'm still going to look for completion to this triangle pattern, a completion to the minute fifth wave to finish the minor fifth wave, to finish the intermediate C wave, and then in turn the primary B wave. The markets continue to weaken. The NASDAQ continues to weaken quicker and more, and a little bit on the stronger side than the S&P. The Russell kind of caught a bit today. The Russell then catches that big after hours as well. So it's just presenting a very confusing picture. Gold Gold, serious bid, folks, in gold. Gold is clearly above 2,300 and was up $38, so almost $39 today. Those are pretty strong moves in gold. And so silver also, right? The bond market initially was down, then ekes out a little bit of a gain. So confusion across the board in terms of what the market should be doing. I think a lot of it, to be very honest with you, is now all rotating around how the options in all of these individual products are trading. So still going to look for upside. Now, if the market really starts to come back down and breaks below 18,204, we have 18,163 further down. Now, I'll go back out to that hourly chart. We've talked about it before. Actually, I need to go back out to the 4-hour chart so that I can show the whole thing, because this has taken a long time. We are overlapping wave one. Where can't we overlap? I don't want to see it below, and this is quite a ways down, 17,618. That would be wave two. And we're looking at a fourth wave, if this is going to be a continuation of this fourth wave. Exactly how I'm going to count it into here, not really sure. Not really sure, but it can. It can swing, come all the way back down. Breaks that. Our next one is 18,163. And then we have 18,034. And then we could probably fill these in once I was able to connect it. But right now, it's not something I'm really looking for. I would actually continue to look for some upside. But if we're looking for where we can have support, you should find on a 4-hour chart, you should find some support at 275, which is the 200. We should find some support back again here at this trend line, which right now is 228, 225. And then again at that low, which is 201, and then below at 163. All right. Moving averages, anybody's game. Flat 200. The 50 turned, and actually the 13 and the 20 broke below and did not manage to regain composure to make it back above the 50, even with that big rally. All right, over in the S&P, it is a tiny bit clearer. And again, let's start here on the 4-hour chart. We have 1, 2, 3, 4. Now, same deal. Look what it did. It went up, beautiful reaction, slammed it back down at 1 o'clock. Actually, the 4-hour, so it's a little bit longer term. And let me just immediately bring it down to that 1-hour chart so we can look inside this. So we still got the 1, 2, 3, 4. Now remember, wave one. That's why I opened up in the 4-hour. So excuse me while I bounce around. That comes in at the highest 52.21. That's an important level because remember here in the S&P, I'm not looking at it as it's a triangle pattern. Therefore, wave four cannot overlap wave one. It would not be expected. And they're pretty dang close. We got down to 52.35, and I'm marking that as and that was yesterday, and I'm marking that as the completion point for minute wave four. Now, that being the case, let me go back down. Let's go all the way to the 15 for this one and open it up. If that's the case, right, ABC, I'm going to put it down at 535. I'm going to put a 4 there. And then I put 1, 2, 1, 2. Now, if that is the case, I'm going to put 2 levels here. I'm not real happy with that, but I'm going to give it the benefit of the doubt. And we're going to put a couple of resistance levels here for wave 3. 1.618 is 52.90. Now let's go inside here. It's going to come in a lot higher. Well, that's 1 versus 3. So again, it's there, but not necessarily the most useful. Oh, come on. All right. There. So in this one, 1.618 is 530607. Now that a little bit nicer. 2.618 on this level puts us up to 5318. So really, we're thinking, okay, I was thinking we might even get up towards these levels today until this, I thought, okay, that could be one of three, two of three. We're off, but they were sideways, and then they decided to sell it. And they sold it hard and quickly, very quickly. And I'm like, wow. So here we were touching 5280, and here we were touching 5250. So you drop this really 30 points pretty quick. Okay. And literally, like, it was going to start to break down again. Now, got to move it back out here to this hour, to the 4-hour chart, because I need to continue to show you. Now, 1, 2, 3, 4, 5. Now, I don't really think I can move it down here and call this 1, 2, and 1, 2, 1, 2, 1, 2, yeah. And then how you going to, it just does not count out very cleanly. So I'm leaving it as 1, 2, 1, 2, 3, 4, 5, 3, 4. So that leaves that in place. Now, if it should turn and continue to move lower, there is support that might suggest, in other words, if I come back in, now remember 52.21, if I come back over here and go, okay, this is an A, B, and we're going to do a C wave down. Well, that C wave could come in at 0.618, and that's 52.19. So I'm like, okay, if you do that market and you then roar ahead, it's going to be tough. So here we are sitting down at a level that I really don't like the market. And what I'm talking about is if this turns into wave A of 4, this turns into wave B of 4, and we come down 1, 2, 3, but then the 4 is way overlapping. So, that's why I'm leaving it like it is. But as I've been talking about, stranger things, folks, stranger things going on in these markets. And so, and again, I'm putting a lot of it on that it's like everybody's just trading, algos are just trading and they're just moving in and out. And we've got options trading. And so a lot of positions being put on and all kinds of different things without trying to interpret what one is doing against the other. Are we going to pay attention to what the Fed? Do we need to prepare for that interest rates? Remember Bostic, the guy from the Fed told you they're out every single day talking. Every day they got them all out there, and I think it was today or maybe it's in tomorrow that Powell, I think it was today actually, that they put Powell out there. It was, they had all kinds of people talking today after ISM and S&P and ADP employment. So I'm sure because tomorrow we have initial jobless claims, U.S. trade balance, and then 1, 2, 3, 4, 5, 6 Fed officials talking. What do you think they're talking about? Lower interest rates. When are interest rates going to come down? Blah, blah, blah. Now, yesterday, or actually today, early, Atlanta Fed President Bostic did a TV interview. And he mentioned that, well, I think those rate cuts might come in the fourth quarter of 2024. I'm like, wow, we've gone from June to December. June to December. Wow. Okay. What did the market do? Well, initially, died. Then they bought it back. I don't know. So you start to feel it's like, I'm not sure what everybody's thinking or what they're going to do. Back in the real world of the S&P, I'm giving it the benefit of the doubt that the 4 holds. We got a 1, 2, 1, 2, and we will start to rise. So resistance, 52.84, 52.90. Look for 53, back at 53.07, which is 1.382 for that primary B wave, which has been exceeded, and I expect it to be exceeded again, but it still sits right there. And now it's being met up with 1.618 for a third based on this. That could fit. So maybe they'll love the initial jobless claims. Maybe they'll love the other numbers that come out. And we'll race up there and then come back in a 4, come back up in a 5 to finish a wave 3, or finish wave A. If we go 1, 2, 3, 4, 5, maybe it's going to be an A and then we're going to be in a C. We're going to have to just really work this out and let the market tell us. But that's what I have for upside. Downside, I can get you support at 325, 235, 230, 2, right there, obviously 35, 230, 52, 19. If it breaks, I have some at that level, the 21 level, which is the top of wave 1. It should find some price support there, down to 19. If it starts to break, it's likely going to be something else. So we'll have to take it up from there. Now I'm going to, just to show you, I'm going to go back out, at least to here. What do we got down below? Well, we got 5205. If it starts breaking 5200, we're starting to break down. We're starting to get into levels that really should be holding. 5127 is going to be a dead. I mean, it would have to, that's a pretty steep drop from where we are. But those are where we start to really look at the cycles and say the cycle is okay. Are we now really turning negative? Is this now all done? Do I need to recount this in terms of somehow this ends up here, the 4 is here, and this is the 5th? It is out there. It's a possibility. Not necessarily high on my list, but it might be. It might be. And I'm not sure even how I would really look at it, because I really tossed and turned with how I'm counting it as it is. But this is when Elliott and the market don't seem to want to match up with one another. And I'm going to go with, you got to go with what the market is telling us. And that is also confusion, sorry to say. So for tomorrow, we have initial jobless claims, and we have U.S. trade balance. And then from 10 a.m. Eastern to 7:30 p.m. Eastern, we have 1, 2, 3, 4, 5, 6 Fed officials, from Fed presidents to Fed governors. And they're all out talking. In fact, all the Fed presidents basically have been out there on the stump. So, yeah, this week we had Fed Atlanta today. We had New York Fed today. We had the vice chair and a Fed governor all today. Tomorrow we have Philly Fed president, Richmond Fed president, Chicago Fed president, Cleveland, Minneapolis, and then a Fed governor. We just don't have San Francisco, and I think she talks tomorrow. No. She got the week off. Oh, no, she talked yesterday. So they're all out there on the stump. All right, I am actually going to finish it up right there. Let's see what happens tomorrow. Again, folks, I think as a day trader, the ability to move in and out of the market is pretty easy. If you're a zero DTE trader, you're finding a lot to do, and you're getting to your targets much quicker because the fact that the options expire today or tomorrow. So those are presenting some good things. And we have zero DTE not only in the SPX, which is Big Daddy, we also have it in the ES, spiders. So a lot of things to choose from. Position traders, again, you're not necessarily getting signals that it's time to get out. So hang tough. Next update, Thursday, April the 4th.